Let's quickly analyze a property using the BRRRR method with EstiMate. BRRRR stands for buy, rehab, rent, refinance, and repeat. This is a great method for adding to a long-term portfolio while using a value add approach and taking advantage of creative financing. We're on Zillow looking for properties in Indianapolis. I love looking at the Midwest. The prices are a lot more reasonable and you can do a lot of great work for low value. We're looking for properties that we could do some light renovation work and still make a profit. So we found this one here for 160K. We see that it recently dropped in price on the listing, so there's definitely some room to negotiate. And when we're looking here with about a $20 per square foot renovation cost, we are initially using about 64K in an initial investment and building up a $58,000 equity. So we're not really breaking even on this initial investment, but we're seeing that the price is going down. So let's see if we could wiggle around and see if we could find a price that could come up with the numbers that make sense for us as investors. So after dropping the listing price down by $30,000, you see that that impact has been affected into initial investment here, now leaving us with a spread of about $20,000. Let's look at the photos here. This doesn't look like a bad property, definitely a little bit outdated and can use a little bit updating. I would say here in the bathroom, it might need to be more modernized. So 40K does seem like a good number, but if you really wanted to, maybe you could keep some of these current aesthetics and lower the renovation costs to kind of see if you could find a way to make these number work in a different way. But besides the renovations, you can see the cash flows are really great. So it's in a good area with high rent values, a good cap rate, and pretty good annual cash flow. You can see that on average, you could rent this out for about $2,300. And what if you were to fully renovate this, you would have the ARV of over $200,000, which is great. So once you have that spread, you could use that money in a refinance, pull it out, either pay down some debt or use that money in your next investment.